From the News Channel 5 Network, this is OpenLine.
Good evening, everyone, and welcome to OpenLine. I'm Carrie Sharp. Thank you for being with us tonight. We are talking about the economy and where everything stands right now. And before you say, oh, I know, you can feel pretty beaten down by the economy, but my hope is if we can understand what is going on and how this impacts our everyday life and where we're going, maybe we will all feel better about it. That's my hope. Fingers crossed. I have a great person to walk us through this conversation, Dr. Richard Tarpey. He's an assistant professor with the Department of Management at MTSU. Thank you for being here.
Thank you for having me.
You've been on the Plus before. We always appreciate fine folks coming back. Economy is really what you do, what you teach your students about. Tell us a little bit about yourself. And you haven't always been in the classroom.
No, I've only been in the classroom full-time for about 3 years. Prior to that, I worked at HCA for 22 years here in Nashville, and then at United Airlines prior to that up in Chicago.
And really in all of those jobs, in some way, dealing with labor, management, economy, it all figures in together, right?
All of it, yep, from airlines to healthcare, definitely.
It certainly does. I do want to start with just the snapshot of where we are. In June, we hit a 4-decade high when it came to inflation. In June, I think we were up on consumer cost 9% year over year. And you hear that, and it just weighs on you. It is hard. Everybody is struggling in their own way when it comes to money. And there's a lot of jitters around the economy right now. Where are we?
You know, that's a great question, because everybody's asking a question.
Yeah.
The challenge, you've probably heard this, we live in different times. The challenge is nothing is working the way it used to, or the way it's supposed to. So we have all these indicators out there, and some of the indicators are good, some of the indicators are bad, which normally we're used to. If a recession's coming, if inflation's rising, everything's pointing in one direction. In today's world, we have inflation's risen, we have jobs are getting created, which is not supposed to be happening. We have consumer spending, which is not supposed to be happening with inflation, not this long. Consumers have been spending for the last 18 months, even though inflation has risen over the last 6 months substantially. Yet people keep spending. So we have all these different things going on that make prediction rather difficult. And then if you think about the people who actually are supposed to be attempting to control this at the Fed, you know, now they're just, I don't want to say they're guessing, because there's some science behind it, obviously, but what has worked in the past is not necessarily going to work the way it
when you
is
can't
intended.
look at history as your teacher, then there is a little guesswork involved then to say, okay, where do we go to control this inflation? What's the next move? Because they have raised interest rates. What has that done so far?
It has slowed down consumer spending somewhat. So consumers aren't buying as much. They're still spending, though. So when we look at the big stores such as Walmart, Target, I think Kohl's just reported their earnings. They have an inventory glut. They've got stuff all over, so they're going to start discounting to get rid of it. Walmart's already started discounting. Target reported earnings earlier this week or last week, took a big hit because of their discounts. So it has started to help lower demand. Nothing lowers demand quicker than high prices, though, which should have happened, and it just hasn't yet. So if you look at gas, let's talk about gas real quick. So everybody is saying, well, our current administration's done this, the government's done this. In all reality, we have a classic example of supply and demand that everybody learned in high school. So supply was cut. Russia, 15-20% of oil was taken off the market when the Ukraine war started. Demand was up. Everybody got released from their COVID restrictions. People are traveling, they're driving all over the place. Demand goes up, price goes up. Now people are saying, hey, the administration's done this, prices have gone down. No, what happened was gas hit $5 a gallon, $7 a gallon in California. People quit driving so much. Demand lowered, prices came down. It really didn't have a lot to do with releasing 200,000 barrels of oil from the strategic reserves. It makes good stories, but at the end of the day, that doesn't reduce prices for a long period of time, because once you use that up, you're back to where you were.
Exactly.
So that was kind of, I like to say it's political. Administration trying to get a good name
It looked like they were
there.
doing something.
Sure. Well, elections are coming up. What are you going to do? Right? So in all reality, it's demand has gone down, prices have gone down. Prices are down to $3 a gallon, people start driving again, prices are going to go right back up again. So it's not necessarily the oil companies profiteering or That's the other side of the story we've heard about.
Yes.
Is the government's looked into that. Sure, they're making record profits, but you're going to make record profits if you're charging $7 a gallon and people are buying it.
Right.
So when we look at all the other stores, or the other industries, I should say, especially retail, we've heard all these stories from in the media about, oh, General Mills doesn't want to raise prices, but we have to. Our costs have gone up. Our costs have gone up. And then if you listen to the earnings calls, which that's where the real information is, because the average consumer doesn't listen to those. That's where you hear, we were able to raise our prices 5% more than our costs. So yeah, they covered their costs, and then they snuck a little more in, right? So
and then some.
It's a capitalist market.
Yeah.
They're going to make a profit.
Do you think a recession is coming?
Yes. The question really is, how deep of a recession? Is it going to be a large recession that's going to impact a lot of people? Is it going to be a little blip? I think the worrisome thing is today is interest rates were raised 3/4 of a point. Interest rates were raised 3/4 of a point. Now they're talking about another 3/4 of a point in their next meeting, which I think is in September. The worrisome part there is, have we really let it work through to see what the first two raises did? So if you keep raising something, or if you keep doing something, you haven't checked to see what it's done, you risk overshooting that target. So I'm a little leery of that next raise as to whether if they go 0.75 again, is that going to really hit the brakes on the economy? We've already seen the economy start slowing down. Walmart's laid off some people. Tesla's laid off people. You can start reading a lot. Tech companies have laid off a ton. So we see companies starting to cut back. And if you look at the other indicators, such as orders for goods, companies are cutting back because we have inventory all over. And then another outlying factor that we haven't seen before is the huge spending shift. Usually in the U.S. economy, spending's pretty consistent across categories. Well, during the pandemic, everybody started buying home decor. They bought exercise equipment, exercise outfits, or clothing.
Did home improvement projects.
Home improvement projects. Well, now everybody's going out to restaurants.
Yes, going on vacation.
Going on vacation. You only have so much money. So now people now are spending more money on food. Well, now I'm not buying appliances. I'm not buying home decor. So all these stores got stuck with all that stuff. And they got more orders coming in from China still. Right, they're on ships right now coming here.
They had to think about that several months ago to place those orders.
And that was something that was truly interesting. Companies did not do a very good job. Now, granted, this is not something we've ever been through. But I would think we could have foreseen a little better the fact that people were not going to stay in their houses and continue to exercise once the doors were opened.
Right.
So companies like Peloton, who built 2 factories, saying, oh yeah, we're going to have our demand sustained forever. That was really a big mess. I mean, that's going to be a case study for years of how not to run your company with this type of situation. So I think we see the stores had a very difficult time forecasting consumer wants and how much people would spend. So now we're going to have a glut. Prices are going to come down on certain items, but that's not going to work on food, right? Food's still going to be up.
And food, obviously a necessity, and that is where really people have been hit in the pocketbook the hardest for a long period of time now. We talk about, egg prices and beef prices. I mean, just everything is so high. What are your takeaways from that when it just specifically comes to food?
Food, like you said, was a necessity, so people got to buy it. They don't have a lot of choices. We've just started noticing. It started about June. People started being more selective what they buy. So up until June, people were still buying the high-priced goods, the name brands. Now when you read about articles that are written, like in the Wall Street Journal, you start reading about Kroger, Publix, some of the big chains are noticing, hey, people are buying more of the store brands than they used to. So now stores are starting to bring out more of the store brands, trying to emphasize that. So we just start noticing consumers start saying, wait a minute,
I got to do something.
Too much. Yeah. Which that means consumer spending is going to start to dip. And that's where we go back to the conversation a few minutes ago. So if consumer spending is already dipping and we raise interest rates again to lower spending and consumer wants, that'll lead us into a recession, most likely.
Just here, this is aside from looking ahead to whether we're headed towards a recession, but just in Tennessee, we're in this tax-free grocery month. And I'm very interested to see the numbers, if people really stocked up during this time. Did it make a difference, or were they like, whatever, I'm not going to do anything extra because I can't right now. I only have so much money to spend.
Yeah, food's a little more challenging too, because what are you going to do with it all? First of all, if it's perishable, how much can you stock up? You can fill a freezer, then what? I don't know anybody that's got 4 freezers out in the garage and filling those up.
Right.
So there's a limit to what you can stock up with, unlike toilet paper during the pandemic where people were stuffing it everywhere. Stuffing in the trunks of their cars and everywhere. But food's a little different because of the perishability. Canned goods and that kind of stuff. But if you're in the stores right now, you don't notice a lot of people with 2 shopping carts full
filling
of
their
stuff
carts
like
over
we
and
did
over.
at the beginning of the pandemic.
Yeah, you're exactly right.
So I don't think people really have gone into the hoarding mode because of prices on food. They're just basically weathering it and cutting spending somewhere else.
Yeah.
But I think up until now, people have had quite a bit of savings because for a year and a half they spent no money.
Right.
Unless they did some major home improvements project. So I think people are starting to have spent through most of that. So it's going to be interesting as we go into the fall and the holiday season where people are going to be with money-wise and what they can spend.
I was going to ask you about that next, but we have to take a commercial break and pay our own bills right now. So we're going to do that and come right back. Stay with us.